Welcome everybody. This is Carlos from Omegavus Trend and the Forecast Mastery Program. So here we go into another forecast update for today, as it is October 26th, is Sunday. The market just opened and all the targets that we had on the swing side of things has been reached, closing most of our index positions, which has been absolutely awesome. As always, it is absolutely recommended for you to check the videos below. I've been trying to timestamp my forecast before they happen, and so that you can just go back, watch those videos, and then follow along on those updates that I do. These are swing trading levels, so you can just tag along and understand how the process works and what we're doing and what we're after. All right. So having said that, the market just spiked on a high. I'm gonna show here a 4-hour chart. This is absolutely staggering. These are all the levels that we've been dealing with in the week. I'm on MES. The green lines are, as you already know, our targets on the way up. We just hit the final one, so there's no other one right in there, which what we call this the mortgage trade, if you will. And what I mean by that is whenever those massive new highs are taken and these slingshots are hit, there is a highly opportunity for the market to revert and try to pull back from those levels. That's one idea or one concept of the way that we approach the market. Number two, the market just basically gap up on the weekend. Another reason why you cannot hold a position overnight on weekends unless you're absolutely loaded in your accounts, because people who open positions on the weekend thinking the market was reaching kind of an exhaustion point, basically they are into a rude awakening. So anyways, with that being said, so what am I expecting? This is what I'm seeing right now, and I'm just doing this as a forecast of the actual forecast that I'm probably going to do tomorrow, right? Which is what I'm trying to do. So right now, the market just hit that massive area. I got DOT here. I'm not trusting DOT. It's the weekend, and DOT, it's mainly used when the market pretty much has the opening, at least on the European session, overlapping into the US session, and that's when you start seeing the momentum happening and the shifting happening. However, I'm starting to see the M1. You see M1 losing a little bit of power. Look how the bright green positive numbers are, and these guys are losing power as quick as possible. The market just opened, and I'm feeling absolutely happy to see an opportunity to sell this market and place a stop on the swing high of things. I am going to play two games here and two game plays. And the game plays is this green line is one of the targets. At least that's the pullback that they need to do. And that will be the decision point for the market to come back and continue further higher. If indeed that's what they're going to do. And we will know this with clarity tomorrow after 9:30 open on the US session. Okay. But on the other hand, the market is most likely to go and gravitates to closing the gap. Mind you, I'm trading micro contracts because it is what it is, right? So I'm willing to take that risk for now and keep iterating as a market progress as this morning. But basically, I'm playing the game of the market just gap up. They need to fill the gap. Number two, hitting that massive daily resistance that we've been forecasting for the last week alone. Again, check the videos so you can see those levels happening. I'm not coming at this and pulling them out of my butt. And those back-to-back indicates a highly a probability for the market to come back and close the gap. And this should be more powerful on a 4-hour chart than instead of 15 and 1 hour, because if I use levels and analysis on 1 hour, 15 minute, I might gravitate to use a lower trail stop, and I might be getting stopped out and so on and so forth. So I need to give them space because I believe this is most likely the scenario. If it doesn't plan out, that's absolutely fine. What this means is if I get stopped out, I gave away Friday's profit. As simple as that. Okay. So But this is the play. If I move along and provide you with the M and Q, same concept, we're looking for a short position. M and Q is a little bit more aggressive. I can only go with 5 contracts in this instance. If I'm not mistaken, it's actually 4 contracts. There you go. I'm going to place a stop right on the top right there. And I'm planning to close the gap, which is this area right there, a little bit above that. That's going to be my play. And in this instance, I have an in-between targeting. I'm going to put it here. Right there you go. And I am going to be looking to get off 2 contracts out of the 4. Maybe I can add one more. Yeah, that's good. So that means that I am planning to go here with 3, closing 3 out of 5, leaving 2 for the close of the gap and that prior target that was left behind. Same concept on a 4-hour chart. So there you go. If I drop down to a 50-minute at this point, this is my play. This is a synergy zone, support zone. As a matter of fact, it looks like such the market should hold, and it's still holding. So let's just be honest. They haven't broke below. So I'm jumping ahead. Quite honestly, there is no confirmation to me to go low. I should wait for the market close below that zone. So in order for you to have some clarity here, this level, I'm going to turn it in black. And that level specifically 25,717. The prices must close below that to validate and confirm the intention of trying to at least close some of this gap. And mind you, we're talking about, and I'm going to, not from here, I'm going to talk from the bottom of the gap of the opening of that bar. We're talking a 189 point gap fill. So if I get at least 25 to half of that of 70, it's golden. I'm way above of what I'm expecting. Is that making sense? So this is my play. Rest assured, I'm giving you the safe side of the play. The safe side of the play is wait for you on the NQ or MNQ to wait to clear it out the 25,717. Prices must come below, close below it, and then they will validate to continue down. I jump on board because I'm following this on a bigger time frame, which is 4-hour chart. So that's my play, right, on a 4-hour chart. But I want you to see the lower time frame. So let me bring now the MES. And MES, same concept. Notice that that's the zone. The zone hasn't broke. They haven't broken below that level. I just marked the bottom of the level. For your clarity, a clear close below 68.65.25 will validate the intentions for the market to carry on and continue downwards. Again, I became a little bit more of a trigger happy here, but I'm trusting the fact that I believe this will be the movement on the way down on a 4-hour chart. Okay, now if I should be following everything perfectly aligned, I will love to start seeing M1 all the way to M3 start losing ground. How does that look like? Instead of green, positive number, 300, blah, 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 I would love to start seeing the numbers as negative 49, negative 70, 73, 20, negative double-digit numbers. This will validate that this notion or beginning stages of entries on the lower node, in this case lower time frames, sellers are starting to step in. And I'm assuming, just think about it, I'm going to give you now the rationale of the analysis as a forecaster. Prices over here close on the downward tick, and a lot of buyers basically stepped in. There was a lot of sellers, by the way, with the stop loss on the above. So sellers basically, as the market open up on a gap, guess what happens? All their stop loss are being triggered. This is the reason of the spike. If we switch to a candle, you can see the read of the candle. There is absolutely completely rejection of the top of that liquidity area. basically sellers are they're being hammered down. All right, so these are things that you need to step away and think a little bit harder just than pressing a button. Everybody can be a trader. Don't be that person, right? Use a rational logistic of how the market works. You understand this is an auction game. For every buyer, there is a seller. For every winner, there is a loser. People and traders, right, as speculators in this case, tend to practice the law, including myself. I'm betting that the market is going to do such thing. So I'm going to pre-position myself in a certain place. I'm going to short the market here and place a stop on the swing high. This is what the big players, algorithms, and all these high frequency traders tend to know. And they gravitate to go and trigger those stops to fill them in, have a better entry, and transition on the way down. So as the market opened today, it found itself with a boatload of order flows of stop losses above the high. Okay, so that's the spike. I mean, sellers sold the market. In order to close their positions, they need to buy back that on a loss. Does that make sense? And by buying it back, it's creating an order flow of buyers. A boatload of buying pressure happens because it's liquidating the short positions on losses, spiking the market up. Making sense? I hope it does. So based on that structure or price action analysis and concept, this is when I'm starting to grasp some ideas, because I kind of understand that this might be, I'm not saying it's 100% that reason, but the logistics says this reaction, this reactionary fake up move, I mean, could be a fake up move of a reactionary impulse move to the upside, is because it's triggering all those floating orders right there. They left behind the gap, so we need to fill the gap. Number three, based on my forecasting that I've been doing for the last week or two, please check those videos below. 68.80 was one of the exhaustion points or target that I was hoping to hit and reach for quite a few, about a few weeks ago. And it's hit. So I got a trifecta validations of a logic that most likely the market is going to pull back and at least cover half of that. And then hopefully they will come back and close the gap. From there on, I will have more information at that point to come in, understand the structure of the market, what they have done in the overnight session, Sydney, Tokyo, overlapping into the UK, UK overlapping into the US. I will use all of that price action, right? All of that order flow, structure of the market, and then come back with more data to do a very in-depth analysis into what to expect from the market from there on. And on top of that, then I built my forecasting framework, as I've shown you for the last couple of weeks, for the foreseen next week. And then I take action on those swing trading zones and targetings, and I can probably drill it down a little bit further down into 1 hour for timing entries, perhaps even 15 minutes. And that's what you have been seeing in the last couple of weeks since I've been sharing my new forecasting framework that I've been using for the last 29 years. All right, so I just wanted to give you a heads up. This is what I'm expecting for the market. Is this going to happen? I don't know. I really hope so. But based on my assumptions and based on my experience of price action structure, this hypothesis that involves three potential scenarios that confluence all of them into a potential selling structure, and at least a pullback analysis must happen. I'm going to give you with the last concept here, and it's this. It's called price symmetry. If I measure this high, I'm going to take just a very simple high right here. This double top to this bottom right here. This movement represents a total move of about 100 points. If I project that from the top, I'm expecting the market, at least based on what they have done before, right, in price symmetry, to pull back at least 100 points. That will suffice for the market in reality. Pull back, close the gap, number one. Number two, hit the pullback zone area that they left behind, right? This is a resistance zone. So look at that. It just finished right inside the zone to potential from there on, potentially move back up again if that would be the case. All right. So that is another concept right there that I'll, this is just part of things that I just teach and share when I'm into this training mode concept. But this might help you dictate understanding factor of what to expect from the market and practice a little bit of forecasting and expectation into the market. With that being said, thank you very much for your time. Let me know how you're using the OT. Let me know how you're using the forecasting. Let me know how you're doing. Click the subscribe button if you haven't, just to get more of this forecasting from time to time that I see valuable enough. And also let us know how we can help you by providing more in-depth analysis. I will follow up with the outcome, whether that be a positive or a negative outcome. I will share with you so you can understand how this works out, and pay attention to the fact that I am not betting all my money into this, right? I'm going into a high risk reversal, counter trend reversal, but I'm using micro contracts instead of minis, and I drop the amount of contracts instead of the usual 15, 20 micro contracts to just 5, because I am going against the grain. So I'm lowering the exposure of my account, but I'm still getting some participation into it. How that kind of makes sense. With that being said, this is Carlos, and I'll see you on the next forecast video.